Once bitten, twice shy could apply to commercial banks, with the 2012 collapse of business and increasing of bad loans as the economy reeled from the over-expenditure during the elections. Profitability, while important, is not as important as self-preservation, as the banks applied more caution before extending credit.
At the end of the day, it was increasing the threshold of quality with which we were going to take on. And we also started to get a nice little mix between volume and quality. Because I think prior to the crisis, and I think generally, everyone was just writing, because rates hadn't really peaked at a huge level that it would start to impact NPLs.
The Stanbic chief executive was addressing stockbrokers on the figures and facts behind the Stanbic counter. In the wake of such prudence by commercial banks, some sectors suffered as they got less credit than before.
I think a lot of people had invested in buses, etc., and business didn't come through. So that sector really hurt us quite a bit. There was also the small SME space, traders who generally import to resell. A lot of those suffered when consumer spending came down. They were sitting on huge inventories that they couldn't reprice.
Economic growth has awakened, and while demand for credit might follow suit, the banks are already controlling their risk appetite, plus the rising of lending rates, meaning that if access to credit for the private sector was already hard, it is bound to become even harder going forward. Samuel Setumba, NTV, Business.